Welcome to Season 10 of Talking with Traders as we begin 2025. We're into the fifth year of this podcast that began in 2020, and we've just surpassed 200,000 downloads of Talking with Traders. Once again, IG have come on board as the sponsor of this podcast. We're truly grateful to have such a global leader in online trading as our sponsors. In the coming weeks, I'll be interviewing various guests from around the globe on the topic of trading. Some of these will be past guests that we welcome back to the show, and some will be new guests. The idea is to attract a broad spectrum of different perspectives from players in various areas of the markets. None of what you hear here is financial advice, but it is intended to get you thinking about how you might be able to apply what you hear here to your own trading and investing. Remember to subscribe to this podcast on your favorite podcast app. That way, you'll be notified when new episodes are released. Or if you watch these interviews on YouTube, please subscribe to our YouTube channel and give us a thumbs up and leave a comment if you wish. We welcome the engagement. Once again, thank you to IG for sponsoring this podcast into its fifth year, and thank you, listeners, for your continued support. Now, let's get into this week's interview. Welcome back to another episode of Talking with Traders, and welcome back to a returning guest. It's actually his third appearance now on this podcast. His name is Alan Edward. He's better known as the Divergent Trader. We're inviting him back for the third time because he was so good the first two times. Alan, welcome. You're in Manchester, and I'm down near London, so we're both in the UK where I am quite a grey day, but that's par for the course in February, right?
Yeah. Standard weather for the
UK. Well, in Britain, I've learned we always start any conversation off with a discussion about the weather, but now we've at least got that out of the way.
Let's get on. That's one thing ticks off.
Let's get on to the matters at hand. It's good to have you back. How have you been since we last spoke?
Yeah, I've been good, thanks, Garth. Just doing the usual trading, working with clients. But yeah, just sticking to the routine, and like we were saying before the call, that's what I like to do. I love trading, love working with people. So yeah, that's basically what I've been up to, just doing that.
Yeah, fantastic. Excellent. Well, I continue to get your emails every week, and they're always very inspirational. They're short and to the point, but they're always just basic concepts that reinforcing the principles of trading and the things that are important to remember as a trader. And I think it's great. I mean, I love what you do, and hence why I've got you back. And what I wanted to talk to you about today is actually, it is regarding an email that you sent out recently. And the topic of it was the 3 Ps of trading. And when I read this, I thought I've got to get Alan back on the podcast, and we've got to talk about this because this is worthy of a conversation. And the 3 Ps are process, purpose, and psychology. And these are the kind of conversations I love having, because it's not, we're not talking about where's the S&P 500 going, or what's Jerome Powell going to do next, or what's, heaven forbid, what's Donald Trump going to say next. These are sort of timeless principles and topics that are so important to our trading. So I want to unpack each of them with you, right?
Yes.
And we're going to start with process. I know you're a coach, you trade, you trade your own capital, but you're a coach, you coach a lot of, DIY traders, I guess. So do I. And I find that so often you come across clients, they just got no process. They're just trying to wing it, right? Is that your experience?
Yeah, 100%. A lot of people come into the trading. They'll read a book or they'll watch some YouTube videos, get the strategy, and then start trading it straight away. And then, they end up hitting a few losers or something like that. And then they give up on the strategy. They think it doesn't work, and they'll hop around for a bit. And, the basis of confidence in your strategy comes from testing and verifying it. So a lot of traders avoid that. Probably simply because, they don't want to do the work. That's probably a big aspect of it. But you need to do that. It's the foundational confidence. If you have a strategy and you hit a few losers, but you've tested it in the past, and this is totally normal for the system, you're gonna be more inclined to to keep following the system, aren't you, and stay
Mm.
with it. So knowing your stats is super, super important. You know.
And that also goes, I mean, you say knowing the stats, that goes into back testing, it goes
Yeah,
into doing the after hours work, the research. I don't know about you, but often a lot of that for me happens on the weekend as well as during the week.
yeah, yeah, 100% with the back. If I test the system, that's all I do. That's my main focus for like a week.
Yeah.
I would be doing it all the time. But this you have to do it. Not only does it teach you like you understand your stats, but you look. I prefer to do more manual testing. So you can actually see it, see what happens, see the drawdowns. Um, and that's they call it the RAS, your reticular activating system. You're training that to spot it, and so the back testing is really important. It's kind of like, a flight simulation. Like pilots, they have to do these flight simulations, and then when they do the real thing, that's kind of like what back testing is as well. You're training yourself in that environment. So when you go live, you know what to expect. And that's the key. A lot of traders, they go in expecting perfection. They think it's all going to go right. But but when you test your strategy, you go in with, I can handle this. And that's a much better way of going about trading. Okay.
Mm.
You expect the drawdowns, you expect this to happen, but you can handle it instead of expecting perfection. And when you go in with that attitude, you just end up getting triggered, emotional, and that's where all the problems can come into play.
Right. Yeah, that's it. So, I mean, having a process, I guess that also it leans into your edge, doesn't it?
Yeah.
Knowing what your edge is, knowing statistically what your trading system typically generates over, 100 trades or 1,000 trades. Of course, every one trade it's random, right? The
Yeah.
result of a single trade is random.
Yeah.
But if you have a system with an edge, and you start to string a number of trades together, eventually after 100 or 1,000 or
Yeah.
10,000 trades, you start to see what the success rate of your system is. Yeah.
Yeah, exactly. And that's another important aspect of your process, understanding the math behind it, the probabilities and things like that. And that's something a lot of traders don't understand, in my experience. So yeah, understanding the math, that the law of large numbers, how your edge works, is important. But yeah, going back to process, it's not just the strategy. Well, it is, but it's obviously your routines, your pre-post routines and stuff like that. But when we look at your strategy, your process, I think another important thing is analyzing your needs versus wants as well. A lot of traders want to day trade. They want to sit at the charts, but it's not always what you. Sorry, that's what they want, but it's not always what you need. Sometimes you have to look at yourself. Okay, are you working all day, or do you tend to get triggered quite easily? Maybe going up a few time frames. Adapting to that can help you. Slow things down, get the right habits. So understanding yourself and how your process can fit your personality is key as well. And so, yeah, needs versus want. Because this is something I did myself. For years, I day traded. I was relatively successful at it. But yeah, after a few years, I was like, okay, what am I doing? How can I reverse engineer this? What's not really working? I was like, okay, day trading is not really doing the best for me right now. Let's try going to a swing approach. And instantly, as soon as I started doing just that, my whole trading changed. And a large part of that is optimizing my willpower. I only spend like maybe 10 minutes a day now trading. So therefore, I'm not like a day trader sat at the charts for 8 hours, letting that willpower get depleted. Because like willpower is basically like a cell phone battery. The more you use it, the more it depletes. And once it's gone, that's when the emotional mistakes and things can happen.
Yeah.
So optimizing your willpower, how can you do it? Higher time frames, can you simplify your system a bit? So you're not having to overanalyze. When there's fewer variables, you make less mistakes, therefore you improve performance and things like that. So yeah, that there's a lot that goes into the process of your strategy and your routines.
Yeah, it's interesting that you say that, and that you found a style that fitted your personality, and I suppose it fits your lifestyle a bit better as well.
Mm.
Because I know you coaching clients, you generate some content as well, videos and emails and whatnot. I mean, that all obviously takes a lot of time, which I presume therefore means you don't always necessarily have the time to be in front of the screen all day,
Yeah,
and often I don't think day trading is for everybody, and in fact, truth be told, I don't think it's for many people at all, quite honestly.
100%. Yeah.
I know it's not for me. And I've also learned that over the years, a style of trading that's better for my personality is also to actually more of a swing trading strategy.
Yeah.
Do the work outside of market hours, know what you're doing during hours. But I don't know.
Yeah.
Number of times that I actually place a trade throughout a couple of times a month, certainly not banging away at the keyboard every single day. And it's interesting that you've also kind of come to that conclusion.
Yeah. 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 One of the things that used to really do my head in was missing trades. And with a swing approach, that instantly narrows it down. It's very hard to miss a trade when you only have to, come up to the charts once a day, take your trade. It's there, it's set up, the candle's closed, you take the trade. So that was something, like looking at the process myself. How can I make things easier and better? Okay, so I hate missing trades. All right, a high time frame helps with that. What else was there? Impatience, if you tend to get impatient, sitting there waiting for your setup day trading, that can take its toll. That can deplete the willpower. You can end up jumping in with form or things like that. Daily system. You don't have to wait. You go about your day, then you come back to your charts. Oh, there's a setup, enter, you're done.
Yeah,
Little things like this, understanding yourself
yeah.
is a big part of it, and adapting to your strengths and your weaknesses and that can really improve your trading. And that's what it's all about. You have to be able to execute your system, all right? And you have to find the ways that are going to do it. And it can be as simple as, what we said, just going up to a higher time frame,
Mm, mm. Fascinating. Yeah, often
Yeah,
less is more.
it really is. That is my philosophy now. Um, I do as less as possible. And it's the law of reversed effort. I don't know if you heard of it. The more you force something, the less return you get.
Mm.
And that applies for trading. The less you do, the more you make. It's a paradox, but it's true.
It is true. Yeah,
Yeah.
fascinating. Yeah, yeah.
Mm.
All right. So the next P in the three Ps is purpose. And
Mm.
this I also love to talk about. It's like all about understanding your why, isn't it? It's the reason that we trade.
Exactly.
Let's
Yeah.
talk about that purpose.
Yeah. Yeah. Purpose is always one of the first things that I work with traders on. I want them to find that emotional connection to a goal. Because, a lot of traders come into this saying, I want to make 1 million. All right. But why not 10 million? Why not 100 million? It's what that money can do for you. That's what matters. Okay. You need to find that emotional connection. And then when you've got that, discipline sort of becomes a byproduct of a strong why. Because what is discipline? It's doing something you don't really want to do. All right. But when you have a strong why, a reason, you're going to be more inclined to want to do the things that get you there. So that's an important point to say. But yeah, it can be a powerful motivator. I always say, write down your why. Have it as a visual. Put it next to your trading desk. And then when you're about to take your trade, you can look at it, and that's going to give you more motivation, discipline, whatever, to take the trade. So that's why it's really important. But also, when you've got a why, you've got a goal now, and then you can actually break down the goals to get there. You can break it down yearly, monthly, weekly, daily, right now, and right now is usually follow that plan.
Mm, mm.
Yeah,
Yeah, I love it. I mean, and I love the fact that you say it shouldn't be a monetary goal. I mean, obviously,
no,
we're trading to make money, of course, but at the end of the day, it's about what that money can do for you, isn't it? It's not the
exactly.
actual money. I mean, the money on its own is so what you can have millions. It's
Yeah,
what it buys you. It's the freedom, I suppose, or the the ability to do good in the world if that's what you're into.
exactly.
Spend time with your family. Yeah.
Yeah, exactly. It's when you focus on the money aspect, you set yourself up for failure because, like we discussed, you can't force your will on the market. You can't force it to do things over time. Yeah, your edge plays out, but yeah, you have to find that emotional connection because at the end of the day, if you've got money and you've got no reason to have it, it's what's the point? What's the point in
Yeah.
having a Lambo, a yacht? It's these materialistic things don't really matter. It's can
Yeah.
you help your family? Can you provide? It might just be as simple as to feel proud of yourself to achieve something that no one else can. You have to just find something meaningful,
Mm.
um, and that way you're more inclined to want to stick with trading. A lot of traders get in for the money and them type of traders don't last because they haven't really got a reason to stay.
Yeah. Yeah. That's so interesting. So what's
Mm.
yours? I'm interested to know what's your purpose? What's your why?
Yeah, so my why was to have the freedom, live life on my own terms, not have to answer to anyone. I don't like having a boss, never have.
Mm,
But more so, to provide for, like my family, my girlfriend, and stuff like that. I wanted to be because I grew up with like pretty much from a poor background, didn't have any money, and I seen my mum struggle and stuff like that. So that was like a motivator. I wanted to make sure, when I had a family and things like that, that I could provide and stuff. So that was a big reason. And going back to what I just said a minute ago, to feel proud of myself as well, to do something that no one else has done, well, very few people have done.
mm.
So, that was my motivation. How about yourself, Garth? I'm interested to hear yours.
So it's actually a great question because I've also
Yeah,
sort of grappled with this over the years.
yeah,
So I didn't come from I came from a background where my parents also struggled, but I mean we were
yeah,
not poor. We were, comfortable. My parents were always able to give me the things I needed in life, but we were certainly
yeah,
not rich. We didn't drive fancy cars or live in a fancy house or go on big overseas holidays. My parents did struggle financially.
yeah,
So I think big part of the reason why I got involved in the markets was actually because I wanted to make money and I thought this is the way, this is a place where I'm going to do it. But over the years, I've come to sort of think, well, again, like you said, that's not really just what it's about. What am I actually seeking? Well, what I'm really seeking is just comfort and security,
yeah,
actually.
yeah,
And
yeah,
I think in my early years as a trader, I was a lot more aggressive, but also probably didn't have the experience. But that led to massive swings in my P&L. Sometimes I'd make a lot of money in a month, but then I'd lose a lot
give
of
it
money
up.
the following month, give it all back. And you
Yeah,
have these huge emotional ups and downs.
yeah.
And over time, I've kind of come to think, well, that's not really what it's about, actually.
That's not how you want to
And
live.
no, and actually don't need, multi millions to live the kind of secure life that I aspire to. Also, don't need a fancy car, don't need a yacht, don't need a helicopter or a jet. Like none of these things. Actually, what's important is to have the freedom to spend time with people that I love. And do things that I enjoy outside of the market. Fortunately, the market is something I thoroughly do enjoy, so I'm happy to spend time on it. But
Yeah,
outside of that, and it is a career that affords you the ability to have that freedom of time. And I think time is such a valuable resource
yeah,
that people maybe don't appreciate enough.
yeah,
To me, it's more valuable than having more money than I could ever spend.
yeah. Totally agree.
So I
Totally
suppose
agree
that's
with you.
that's my why, and it has changed over the years, but for the better.
Yeah, and that's the thing with a why. It can always change, so it can always be adapted. We never stay the same. It's never constant. You
Mm,
grow, you
yeah,
evolve, and your reasons change. But that's important. You always need to have them moments where you reflect on things and what is it that I want.
yeah,
And use that as your motivator.
yeah,
Mm.
totally. Right. The third and final P in the three P's is psychology. Right. This
Yeah,
deals with mindset, and it's hugely important to success in trading, isn't it?
100%. Yeah, it's been the probably the main pillar out of those three that have helped me the most. But again, with psychology, same with process, there's lots of variables to it, and the same with psychology. There's a lot of different things to the individual. Uh, but one of the main things that's helped me and a lot of traders that I work with is learning how to detach from triggers. Obviously you need to understand your triggers, but that is where most of my work goes on traders nowadays. Because everyone gets triggered, but not everyone knows how to handle them. So, for example, you hear this phrase a lot: control your emotions, trade like a robot.
Mhm.
Okay. Now, I hate that because it's not true.
Yeah,
So, when you have triggers, it's a natural response to a stressful situation. All right. You can't initially control that, but you can control how you respond and manage after it. It's kind of like a telephone ringing. You can't control the phone ringing, but you can control what you do with it. You can
yeah,
choose to answer it, you can choose to chuck it away, go do something else. and that functions in the same way as your thoughts, okay, your emotions. So you have a choice, and it's learning to unlock that. And that is the difference between a pro and an amateur, in my opinion. Simply down to the way they think and respond to these triggers. So, for example, a pro and an amateur, they could have four losing trades in a row, and they'll both have exactly the same thought, like, what if I lose my next trade? Okay, but the pro trader doesn't stay with that thought. Okay, they'll acknowledge it, let it go, it fades away, and then they focus their attention on, following the plan. And that has like a positive domino effect over the long run. It's a healthy thinking strategy, basically.
Yeah. Yeah.
Whereas what happens with like the amateur trader is they'll ruminate. They end up in what I call loop mode, which is a circular thinking state, where they'll
Right.
ruminate about what's happened or what could happen, and then this leads to a negative domino effect. It affects the next trade, creates that vicious cycle, basically.
Mm.
So, that one skill of learning to detach from triggers
Mm.
is key. Okay. So, because how much is a problematic thought that you've forgotten? All right. If you can forget about your last mistake or you're losing trade or whatever, when you come to your next trade, you're going to trade better, aren't you? But
Yeah.
it's staying with them triggers that I find is the problem. So, learning to detach is a big one. And that's what I work with traders. So yeah, detachment is a big one. But it's all about creating awareness initially, and creating awareness of having these triggers is key. And then you work on them from there. So yeah, I hope that makes sense.
Yeah, yeah, yeah. I guess it's being in control of your emotions, and I know Mark Douglas's book Trading in the Zone, which is probably one of the most famous trading books, and certainly one of my
Yeah,
favorites that I've reread a number of times. He makes the point in that book that you need to treat each trade independently of all other trades. So yes, you might have lost on your last trade, and you might have lost on
yeah,
the one before that and the one before that, but it doesn't necessarily mean that the next one is also going to be a loser. You've got to just, like you said at the beginning of the interview, you've got to trust the process
yeah.
and know that statistically your edge does play out favorably over time. So just because, your last trade or your last five trades were losers doesn't mean that the next one will be. And I suppose it's understanding that and getting to that psychological acceptance. Yeah.
Yeah, 100%. That, like you said, you need to know your data that can give you confidence with the strategy following it. But I like what you said about you what what I want to just mention actually is zooming out. So we've got like a recency bias. So a lot of traders base the confidence on like the last trade, you know, and if that last trade was bad, what they're going to base the confidence on that, and they'll end up spiraling. But when it comes to confidence, what I always say to create consistent confidence is to zoom out. So instead of looking at your last trade, look at the last 50 trades. Okay. Have you followed your process, managed risk on most of that? You'll probably find that 90% of the time, you are following your plan. Okay. And that's how you should base your confidence, not on them single trades, like you said, because that's where, short-term outcomes, that's where you end up spiraling. So that's an important concept. And also, we also have a tendency for a negativity bias. We'll look at all the things we've done wrong, you know. So, for example, if you're doing your journaling, which is something I think we're going to talk about, you know, most people use this as a way to blast themselves, bully themselves at all the things they've done wrong instead of looking what they've done right. So, zooming out is super important. Looking at the strategy over the long run, basing your confidence on it as well, looking at a large sample size. So yeah, that's what I'd say there.
Yeah, it is interesting, and it's also I like what you said there about zoom out and look back. Funnily
Yeah,
enough, I've got a young guy who I've been mentoring for a long time, and
yeah.
he took the plunge to trade full time about a year ago, and
Right.
he's going well. I mean, I think
Well,
it's not been easy, and I think realistically we know it never is easy.
no.
But he shares his journal with me regularly, and it's exactly he had a tough day earlier this week, and he sent me the journal, and it was great to see in that he wrote, "What did I do right?" And
Yes.
because he had made a couple of mistakes and lost some money on the day, but he had done a few things right. And also then I said to him at the same time, just don't forget take one great big step back and look at where you've come from a
Exactly.
year
Yeah.
or 2 years ago,
Yeah.
where you were relative to where you are now. You've climbed a huge mountain and you've got a beautiful view to look back on. So today might have not been a good day, but just look at the bigger picture. And I
Yeah.
suppose that's important.
That
That's psychology, yeah.
Yeah, I love that. And you know, a good little trick you can do is just try and speak to yourself in third person, like your own trading coach, because we do have a tendency to bully ourselves when we speak to ourselves and things. But if we're talking to a friend or telling someone else, it's a lot kinder.
Yeah.
You've got to try and keep that kind of perspective.
Yeah.
So yeah, try and speak to yourself like your own trading coach, and you probably improve a lot more. But another thing, is gratitude as well. I'm a big believer. Think about all the things that you've got as well. End on gratitude and start the day with gratitude as well. Because you might lose a trade, you might have had a losing week, but at the end of the day, think about all the things you do have. You've got your health, you've probably got a family, you've got food. Think gratitude. It's not as bad as you think. It's just a trade.
Yeah.
As long as you're managing risk and you're following your plan, you're all right.
Yeah, yeah, so good that, so good.
Yeah,
You mentioned journaling, and that is the next topic
yeah,
I want to speak about before we wrap it up. Is journaling because I know, and it's something I've wanted to speak to you about for quite some time. Actually, a while back, you sent out a great email around journaling and the importance of journaling. So yeah, I mean, I also want to talk to you about how it all ties back in with the three P's that we've talked about: process, purpose, and psychology. When you're coaching clients and you're helping them to set up a journaling process, what sort of things are you recommending them to put into the journal?
So I'm just going to bring up my journal and go through some of the things for you.
Yeah, please do.
So is what? Yeah, no worries. Um, so yeah, with journaling, there's three different kinds of journaling that I recommend. So obviously there's like the statistics, your data kind of stuff, and I recommend using software for that. I use TraderSync myself, so that's like data that you just could never do yourself. And then there's the performance journal. So it's about setting goals, reviewing your stress levels, energy levels, moods, and creating goals for the day, and then a reviewing process, an evaluation of how well did you trade, what did you learn, and what can you do to improve. They're the kind of things that I like to do with the journaling. And then there's the other side of journaling where you're doing self observations, of yourself in the market, so you can learn. The point of a performance journal is to create that feedback loop, that constant growth loop. That's why journaling is so important. Um, so yeah, they're the kind of things that I like to do with traders. Performance journals and statistic kind of journals, because you need to gather data so you can learn how to improve your edge
Mm.
and things like that. Um, but yeah, they're the main ones. But something else I do as well that I work with clients on is tracking efficiency. So this is a good way of improving your performance, basically, and focusing on the process. So, for example, you track your trades and you track any mistakes and things that you do, and then you calculate, out of like say, if you took 38 trades, for example, 48 trades, let's say, and out of 34 of them, you was right. But the other ones, you made some mistakes. So you've got like a 70% efficiency there. Okay. So we always want to aim to get to about 90%. All right. So when we know what our efficiency score is, we can aim to get it higher. So we can go for, the next 20 trades. Let's go for flawless execution, following the process the best we can, and get that efficiency up to 90%.
Mm.
Okay. And I find that's a good way of removing the focus from the outcomes and putting the focus on the process.
Yeah,
And it's like a little game, you want to get that high score,
yeah.
so that's something I find really beneficial, and it's something I've always done myself. So yeah, there's some of the things that I do with journaling.
Yeah, that's really cool. I know of a colleague who also does that, tries that efficiency thing, and just for
Yeah,
the benefit of the listeners, when you're saying 90% efficiency, we're not saying 90% of your traders will be winners.
no,
We're
no, just
saying
following the plan,
exactly.
and
It's about
that's
like
it.
executing the plan flawlessly, whether the trade was a winner or a loser.
Yeah,
efficiency comes out to did you stick to the plan and did you stick to the rules, right?
That's it.
And this colleague that I have, he basically runs it's like a running total of the number of trades that he has executed flawlessly. And that's not to say they're all winners, right? A lot of them are losers, but a
Yeah.
losing trade that was stopped out at the stop loss with the correct amount of risk lost, etc. That's a successful trade. And he effectively just runs a counter to see like how long can how high can the counter tick up before he
Yeah.
breaks the rules and executes an inefficient trade, and then he has to start the clock again. And
Yes.
I remember, he crowed loudly about it on Twitter when he hit 100 trades in a row, where he executed 100 trades in a row flawlessly, and
Brilliant.
that was brilliant, right? Because he
Yeah.
obviously by following that process and being flawless in the execution, the money comes as a byproduct, doesn't it?
Exactly, exactly. And that sounds pretty much exactly what I do. It's a good way of focusing on that process, and yeah, it removes yourself from the outcomes. A lot of traders they put the self worth on every single outcome. They see a losing trade as a reflection of themselves, and a winning trade the same as well.
Mm.
So you have to remove that the best you can. And I really do find uh, focusing on efficiency helps with that. It removes the focus away from it.
Yeah,
So yeah, I highly recommend doing it. And it don't have to be complicated. You just track how many trades you've done, track any mistakes, and then calculate what your win rate is.
yeah,
Basically, that's
yeah,
what it is.
yeah,
Yeah,
yeah, yeah.
yeah, it's
Fascinating.
good.
Yeah, good. All right, Alan. It's always so good speaking to you, and I always feel like we could keep going. But I said
Yeah,
to
I
you
know.
we'd aim to be around 35 to 40 minutes, and we're nearly there. Um,
Yeah,
I
yeah,
always do just like to give you the opportunity to let the listeners know about things you do. I know you do coaching. Uh,
yep.
and that coaching that you do, I mean, we've been in contact for nearly 5 years now, you and and I know that you've come along in leaps and bounds, and I think you're actually quite full up in terms of your diary now, aren't you?
Yeah, I'm struggling for spots at the moment
Yeah,
because I'm only one guy. There's only so
yeah,
many people I can work with. But
yeah,
yeah, I do the one-to-one coaching with clients. I work with numerous different traders, all types, some hedge fund managers, retail traders, um, all sorts of traders, helping them just upgrade the trading. So yeah, if
yeah.
anyone's interested, just reach out to me at my website, thedivergenttrader.com.
Okay. And
Yeah.
Twitter, you still active there?
Yeah, still on Twitter, Trader Divergent, also on Instagram, Trader Divergent.
Yeah, yeah,
So
yeah.
type in Trader Divergent, you'll find me.
He'll find you. Yeah,
Yeah.
fantastic. All right, Alan. Well, let's wrap it up there.
Yeah.
It's been good. It's really been fantastic speaking to you again.
Of
And well, yeah, I hope we can do this again in another
course.
year or 18 months like the last time. Yeah,
Yeah, I know. Well, it's crazy, isn't it? 2 years since the last time we did it, we were saying, weren't we, before?
yeah, yeah,
Time
yeah.
flies.
Yeah, it does indeed. It does indeed. But thank you again. I always
Yeah, thank
appreciate
you.
your time, and I appreciate the wisdom that you impart here. So thanks once again.
Thank you, Garth. Thanks for having me on. It's been a pleasure.
Radio. Cheers.
Cheers, mate.
Thanks for joining us for this week's episode of Talking with Traders, sponsored by IG, a world-leading CFD provider. We really are privileged to have such a strong global provider of online trading services as our backer for this podcast series. Remember to subscribe for more episodes by clicking on the subscribe button of your favorite podcast app, or if you're watching on YouTube, please subscribe to our YouTube channel, give us a thumbs up, and leave a comment. We welcome the engagement. Till next time.